less meetings is divine.
I think Plato said that.
Did he? I know MattyP did.
Matty Plato.
Was that MattyP? Was that Aristotle? Was that Seneca? No, it's MattyP.
Shoot, cool. Brought to you by Fairlife, of course, as always.
One day.
One day. Well, hello there, listeners. This is the HIG podcast. I am MattyP. I am here with Bronson Kaufusi, as always. What's up, Bronson?
How's it going? It's good to be here.
We are here at the Harris Financial Center in Provo, Utah, and here to discuss something with one of our favorite people that we get to work with here, Mr. Jesse Yeats.
Thanks for having me.
What's up, Jesse?
What's up?
I don't know if I ever told you this. Xander, his favorite word is yeet. He always yeets things, throwing stuff around everywhere. And so for the first 6 months, I had to mentally train my brain to not call you Jesse Yeats, because Xander yeets everything.
Jesse can yeet for sure.
Yeah.
So, funny thing, that my last name said in a Thai accent is an inappropriate word. It's a profane word. And so when I lived over there and I would tell people my name or they see my name, teenagers would always be like, "What?" And they would bust out laughing. And it's like, oh, geez. It's probably, I've thought about it, it's probably the equivalent of the movie Meet the Fockers?
Yeah.
It's probably something like that in English.
Oh, gotcha.
Anyway.
Oh, that's awesome.
But you are saying it very much like they say it. And it's like, oh yeah, I'm glad that Xander likes my name said that way. All the Thai teenagers would agree.
Oh, that's funny. That's funny. Well, just to give you a little teaser, what we're going to be talking about here in a minute, we're going to dive into some of the whys and the hows and the whos and whats of RIAs, which stands for Registered Investment Advisor. But before we roll into that, Jesse, we have a couple questions we got to ask you. They're questions that we roll through with everybody who comes on here, just to help people get to know you a little bit better.
Great.
Yeah.
So our question one, Jesse, what's your dream car?
Porsche 911 GT3.
Specific, I'm not surprised. Jesse has great taste in cars.
I do have great taste. Yeah, if you disagree with that, then we're not friends.
Dream car since you were a kid?
Yeah. I mean, I think I had a 911 Turbo on my wall, as a poster growing up, but it's been a GT3 ever since they came out with the GT3.
That's cool. All right, next. What's your go-to snack?
Ice cream.
He's a legendary ice cream.
Aficionado.
Yes. Aficionado. I can always count if I need
Bronson likes business trips
ice
that
cream.
include me because there's always lunch and dessert, or dinner and dessert,
Yeah, Jesse knows how to do that very well. High level. In fact, he chose
passionate.
one. There was one that was gonna close. We went on a trip, and we were like, where do we go? Jesse found it and got us there in less than 5 minutes, and they closed. Maybe they closed in 30 seconds or something. I don't know, but it was awesome.
They took our orders and closed it.
Oh,
yeah.
That's cool. All right, third question. What is your favorite travel destination?
Thailand.
Yeah.
And I live there, so it's most people's experience will be different from mine because I can speak the language and everything. So I have a deeper love for the place than most, like a tourist would.
Sure.
So it's not apples and oranges, just like a regular tourist experience. But
Gotcha.
Yeah.
So you're a little more integrated.
Yeah.
And appreciation for the culture and people.
Yeah.
I need to get there sometime. One of these days, I'm going to take you with me. You and
I'm
Melanie
a
can
great
come.
tour guide.
All right. I bet you could. Yeah.
Know
Tell
all
me the
spots.
foods to avoid.
Yeah.
Or the ice creams to go eat. Next question. What is your biggest motivator, or who is a mentor that has helped shape you to who you are today?
Okay, I'll go with the first one. Biggest motivator besides myself would be my family. My wife, my kids, what they want out of life. Yeah, that definitely keeps me going and keeps me ambitious.
Oh, that's cool.
Yeah, my job is to provide a great life, so got to give it to them.
You have darling kids, darling wife. It's always
I
fun to
do.
see them running around.
Yeah, they're the best.
They're all
They're the
awesome.
best.
Your little son has some good shoe game.
I'm
sure it comes from you.
No, not at all. It's just my wife.
Video games. He's very good at video games.
Oh, yeah.
I've witnessed it live.
He loves video games. It's true.
All right, question 5. What is a maxim that you like, or that you live by, or that tends to come to mind?
I don't know. Okay, I thought of one. So this is often attributed to Aristotle, but it's not. It was actually he's an American philosopher and author, Will Durant. And he was actually paraphrasing Aristotle. That's why it's often inaccurately attributed to him. But the line is, we are what we repeatedly do. Excellence then is not an act, but a habit. And so obviously that just speaks to the importance of good habits.
I like that.
Ooh, that's a good one.
Yeah, that is a good one.
Yeah.
Oh, nice. Good choice. Well done. Throw that one up on the wall too.
Yeah,
we should have them.
So you know what's so funny? It's like, it sounds like a quote you would see like in elementary school, like on the wall. But funny enough, the place I saw it was many, many, many years ago. When my brother was in the hospital, I went to see him, and it was literally on the wall. And I read it, and I was like, "No, dang, I love that."
Take a picture of it.
And it said Aristotle, and for the longest time, I'm like, "Wow, that Aristotle guy is a brilliant guy." But it was actually Will Durant.
Comes with the story too. Even better.
Yeah, exactly. It literally was on the wall.
All right. Well, speaking of excellence, we work with a lot of excellent people here, our investor partners, but also people who aren't necessarily our investor partners. And that's why we brought you here today, Jesse, to come chat with us about that, specifically RIAs.
Yeah, and RIA is just for the audience, in case that is a term that you're not familiar with, basically means a wealth management firm. So if you have a financial advisor you work with or a wealth advisor, they work at that firm that is called a registered investment advisor. That's how they're filed and registered with the SEC. That's what they're called.
So just some background, Jesse, in that space?
Yeah.
Maybe could you just kind of tell us a little bit about that?
Yeah, I started my career at Morgan Stanley, which is, a bulge bracket bank. They're a broker dealer. They're a registered investment advisor. So they manage individuals' money, right? That's what firms like this do. And so this is one of the many types of partners we work with, and has become more relevant this year than in years past. We've worked with them casually for many years, but it has become more important this year because of some of the growth and specifically getting approved on the Charles Schwab platform.
That's a big deal.
Yeah, and that's enabled us to work with firms like Charles Schwab, like RIAs everywhere. So sorry to keep going, MattyP.
No, I think that's perfect.
But yeah, because so previously, for context, when we would work with, say, we start talking to an investment partner or an investor, and they want to bring their advisor into the conversation because they want to get their opinion on what our offering looks like. Their advisor, give a thumbs up, thumbs down, right? But there was no other incentive. In fact, there's really kind of a natural disincentive for an advisor to tell them, yeah, you should go work with this other group. Mm-hmm. Because what that meant to them was the investor would be taking money out of their financial advisor's book and then take it, to somewhere else and take it to us. And so there's actually a disincentive there for financial advisors and wealth advisors. And so all of the interactions we've had with firms like this in the past were just casual in nature, where they would say things to the effect of, if it's what my client wants to do, if I feel like it's still a good thing, even though I don't get compensated for it, then I'm all about it. And so it's always been casual. Now that we're on the Schwab platform and a financial advisor is able to see our offering and have it aggregated with all of their other offerings on the client statement, and provides a much better experience, and they're willing to have that conversation because it doesn't take away operationally from what they do, and it allows them to provide that good client experience.
Yeah, one thing, Jesse, maybe you could clarify for some of the people listening is, how does the offering sit on the Schwab platform? How does that actually work? Because I'm curious, because I feel like a lot of people might be like, okay, but then how does my advisor see that? How's it all kind of the background look?
Yeah, good question. I actually haven't been behind my computer and been on the platform to see it myself. I've just been provided screenshots with how it looks. Mm-hmm. And so effectively, Charles Schwab has an alternative investment platform.
Like a marketplace almost. Right?
Like a marketplace, exactly. Where they have a number of different offerings. Think of all the big PE firms in the world, the Blackstones and KKRs and Carlyles of the world. These large firms and, obviously smaller firms like us have their alternative assets listed there and different offerings listed there. And they're listed under a QSIP number. that QSIP, think of it kind of like a ticker symbol, like a stock ticker. And so they are able to identify an offering by that QSIP. And so just like those larger firms, we have a QSIP 2 under Harris Investment Group. And so any fund that we have approved on the platform shows up there.
Oh, it's awesome.
Yeah.
I think that's important to know, just so people can envision kind of, okay, what's my advisor looking at? What do they see? Maybe you could touch on that, on why our offering, how does it compare with the other offerings on the marketplace? And what does that even look like?
Yeah, that's a great question. So in talking with the registered investment advisors that we've begun working with more formally, I've asked that question.
Yeah.
I think it's important to know, right? Like,
Yeah.
why are you working with us? You know, there are so many real estate private equity firms like us. And so there's a couple answers, I think. So number one, the thing that I've heard most is, first of all, our product is very niche. It's new, and it hasn't been institutionalized. What that means, and I'm speaking to specifically gas stations and truck stops. And so, listeners to this podcast will know that half or so of the firm portfolio today is multifamily. And we do a lot of multifamily apartments. Multifamily apartments is a very, very common sector within
there's a lot.
real estate, right? Within the asset class. And so we're kind of, dime a dozen when it comes to multifamily. Lots of firms do it. When it comes to gas stations and truck stops, it's more unique. It's less common. And so when a wealth advisor is looking at us and they're considering all the other, they're thinking of the allocation across all their client portfolios, they may have exposure to similar vehicles. What I'm speaking to is the absolute triple net lease structure of the assets, where we are the landlord and we have tenants who pay us a monthly lease. But those triple net leases aren't under a gas station or a truck stop. And so because it's different, they value that.
Yeah.
And then I just mentioned that we've heard them say, what's nice is that this sector hasn't been institutionalized. You can find so many different REITs and large funds that focus on multifamily. Just throwing that as an example, because that's what we do. But you just don't see that as often with gas stations and truck stops. So that's probably the first thing, is that it's unique. It's more niche. The second thing that they highlight is they value the tax benefit. So just really quick, of the different offerings that are out there or products out there, generally, and this is just a generalization, but usually the product is investment focused, or if it's tax oriented, it's more tax focused.
Yeah.
It's more of a tax deduction even. It's not really an investment. And I'm speaking to land conservation easements. I'm speaking to art donations, to leveraged Forex trading. All these things may not have a investment angle. And so you're not actually looking to make a return on your money. You're just looking to generate a loss that you can lower your tax liability. Yeah. There's lots of different tax avoidance strategies and even schemes out there. And so there's usually this bifurcation between the investments and tax. Now there are some exceptions, of course. Energy is is obviously an obvious category. Exploratory oil and gas has both an investment, but also has tax deductions through IDC, which is intangible drilling costs. The intangible drilling costs of an exploratory gas offering, you can take that against your tax liability in the first year. And so I'm not saying that we're the only ones that have a coupled investment and tax. There are other things, but they're just not very common. And so to have something where you have this risk profile of an absolute triple net lease, and you pair that with what we're seeing now, 200% plus in first year phantom loss benefit, is really unique. So again, the growth profile, we're modeling 15% type IRRs. Income, we're seeing anywhere from 6 to 8% right now. And then depreciation is 200% plus. And this is not a solicitation, by the way. I'm just giving you just high level kind of the deals that we're seeing. And so having that tax coupled with investment is really attractive from an RIA's eyes. Yeah,
because the RIAs, to be able to provide something like that is unique, because most of the time that's not what they're providing. So to have access is is massive.
Yeah, and it double dips in a way when you're an advisor and you're considering what value does this add. What is the accretive difference that this addition to the portfolio is going to have? What's the impact going to be? It's nice that it's not just investment, but there's also tax implications, and in a positive way, and being able to shelter the cash flow from the investment or shelter other types of income that comes through on their tax return can be pretty meaningful.
That's so true. I think it's a huge step for Harris Investment Group, and it opens up what we do for more people. And because like you said, not everybody knows about this.
Yeah. Yeah. I think it allows, the other thing that's really positive is I think it gets us on the same team as these wealth advisors, and where we will have conversations. And again, because of just that natural disincentive, because of letting their assets go out the door and we're having them work with a different company, because we're able to remove that by custodian on the same platform, which is Schwab in this case, that kind of brings us and the advisor on the same team. And so they will be more inclined to think openly, think more creatively about the tax side, think about how it complements on the investment side, and work together with them to benefit the mutual client.
So if I'm an individual and I'm listening to this and I want my wealth advisor to take a look, what's the best way to go about that? How does that work?
Yeah, we'd love.
Is there like a faux pas with contacting your wealth advisor and saying, "Hey, can you talk to these guys over here?"
No, not at all. When we get that all the time. Yeah, we'll have an advisor reach out. Yeah, the email that we generally like to use is our investors@harrisinvestmentgroup.com email. And folks will reach out to us cold all the time and ask, "Hey, I've got a client that want to look at your stuff. Can I have access to your data room?" And then we share it with them.
Cool.
So that way they can, look through it and kind of do their own DD on what we're offering.
Sweet.
No, I love that. Like you said, when we're working with our investor partners, a lot of the time they bring the whole team. The financial team comes because they're looking at it and thinking, okay, I got to understand this. Everyone has to understand this. And lots of times it's the advisor, the CPA, and everyone, and then the family, whoever it is, right, or individual. A question I have on our side, do we require are there any other requirements that on the Harris Investment Group side towards the RIA? And specifically, I'm thinking like, we're happy to come to you. Like, is that something that we require? Do we need to sit down with the RIA and their client, or is it just the RIA talking to the client and we're not in that picture?
Yeah, great question. So it is 100% up to the client and or the RIA. And so we'll talk to the RIA, never even have interfaced with the client before, and that's how they prefer it.
Yeah, that's great.
They want to be the investor. They want to be the LP. They want to be the relationship. And so they may have a number of clients that they represent, and we are only reporting to them. Yeah. And then they distill that information to the underlying client, which is great. And then we have others who say, actually, we're going to step out of the way and make the introduction, but we're still integral in the process. We want to be informed, CC us on the emails, keep us in in their investor portal. You can add us as another user, so that way they have like full transparency, which is great. But yeah, talk to our clients, and you can have that relationship. So ultimately, it just depends. It's up to the financial advisor or wealth advisor and what they want to do.
Yeah, no, I think that's important. Yeah, to be able to have that flexibility. Just
we try to make it easy. We try not to be rigid in how we work together with these RIAs, and so that way we can kind of mold to however they like to work with their client.
Yeah, I love that. This is my last question. I am really excited about this. Can you get the lay of the land from a Harris Investment Group scope for an RIA that doesn't know us and how we operate in Q4? Just because that's where we're at currently. And I think it's valuable because Q4 gets pretty, there's a lot of things moving. Yeah,
it's pretty crazy.
Yeah. So we for folks that don't have the context behind what Bronson just asked, most firms will raise funds for 6-9 months, a year, or heck, in different asset classes like venture or traditional PE, LBO PE. They'll raise funds for 1.5 to 2 years plus, right? As part of their capital raise period before they start deploying capital. we do something very unique. We're boutique, which allows us to be, very nimble and dynamic. But in the fourth quarter of most years, if we had the deal flow to support it, we will raise a fund. And we will raise that fund over a few months, call it September to the end of the year. And we will simultaneously raise the capital and we will deploy the capital before the end of the year. Yeah. And the reason why we do that in that very short, intense, busy, stressful time period is one of the key performance metrics that we're looking to attain is depreciation for the calendar year. And in order to generate that depreciation for the calendar year, you must acquire the real estate in the calendar year. And so we can't let it roll through. Investor partners will come to us and say, hey, one of my objectives is generating X amount in depreciation for calendar year 2025. Well, in order for us to deliver that to them, we have to actually buy the assets, right? And so we are simultaneously raising and closing. So it's a very busy time for us in Q4. And that's probably heightened a little bit this year more than previous years because we're seeing the rebound in real estate, and we're certainly in the middle of it because deals that we've been bidding on, we're losing because other folks coming in and outbidding us.
Yeah.
And it's frustrating. But it just means that we may have less assets in the fund than what we were originally anticipating just because of the nature of the market. Folks being willing to pay more than what we are willing to pay. So we may fill up faster. So we're generally raising capital for the, before December, before we stop raising capital, but before we stop accepting commitments because we've reached capacity. But this fund is a 506c. It does allow us to generally solicit, but even in this medium, we've always taken the approach of, we're not a crowdfunding firm. We have personal relationships with all of our investor partners and want to understand their details, their suitability. You mentioned coming from an RIA in the past. It's in my blood and DNA at this point that I kind of like to understand comprehensively the whole picture before letting someone invest. So despite the fact that we're talking about this fairly openly, it's very important to us that we have a conversation with everybody that's interested and understand the financial details behind them wanting to make an investment.
Yeah, man, this has been great. I feel like we've learned a lot. I feel like it's a good opportunity, and thanks for explaining that. Just because, if there is, you never know who's listening, and if someone needs help and they're looking at our stuff, it's good for them to know the context of our world on this side from a broad view. So thanks for hopping on with us, Jesse.
Absolutely. Thanks for the invite.
Appreciate it.
Oh yeah, teamwork makes the dream work, right? Bring your whole family in to discuss your investments.
We've done that many times. It's definitely been a thing.
Well,
Jesse, it's been a pleasure as always.
If there's anyone out there that has a question for Jesse, or an RA question, or a question for anyone on our team, reach out to us, contact@harrisinvestmentgroup.com. We'll get back to you.
Cool. Thanks, guys.
Hope you find your dad.
He's out there. I'll find him. It's probably with an RA. No, just kidding.
The HIG podcast expresses the views of its participants and may not represent the views of Harris Investment Group. The views discussed are subject to change without notice. The HIG podcast has no duty or obligation to update the information contained herein. It should not be assumed that past investment performance discussed is an indication of future results. Wherever there is the potential for profit, there is also the potential of loss. This is the very nature of investing. The HIG podcast and its affiliates do not provide tax, legal, or accounting advice. The information shared on this podcast should not be construed as an offering, advisory service, or investment advice. Consult your own tax, legal, and accounting advisors before engaging in any transaction. This podcast, including the information contained herein, is the sole property of Harris Investment Group and may not be copied, reproduced, republished, or posted in whole or in part without prior written consent of Harris Investment Group.